Welcome to Power Charting. I'm Bruce Frazier, and this week is part 2 of sector analysis. And we're going to get into some of the sectors that we couldn't get to last week. I really appreciate everybody's input and comments and suggestions regarding power charting in general, and in particular the things that you're interested in seeing. And I will do everything I can to make sure that we're covering the material that is of most interest to you. And so thank you so much, and thanks for watching. So here we are going to start. Well, let's look at our agenda for today. And we're going to start with some blog notes from this week's blog, which it's a very interesting environment in the stock market, looking at the Dow Industrials, point figure counts, Wyckoff setups. Then we're going to get into sector studies, and then I'm going to do an industry profile, and we're going to look at restaurants. And so let's get started, because I have way more than I can do in the time that I have. So you've seen this chart before. This is the most recent blog where there's smoke. I did 2 point figure studies here, and this one, as of Thursday, was fulfilled. And so we can see here, well, I guess it was Wednesday. And so we've gone into the range here of this objective. It could go through the objective slightly and still be a good count hit. And so this red arrow shows us where we got to as of yesterday. Here is the same point figure counts, but on a vertical chart. And so we can see in the blue box, this is the count area that goes to 25,000 and 24,800. And we touched it yesterday. Interestingly, on the decline that came right at the moment when A.G. Mueller had made his presser, where he had made announcements regarding his investigation. And so that is an interesting place from a technical point of view and from a Wyckoff point of view, and I'll show you why in a second. But what we want to see now is whether or not we can hold in the area of this price objective and then consolidate and then turn back up into the trend channel or into the trading range, or whether there's going to be continued weakness after a pause here and then an attempt to go down. And we have a very large count. It's not even the biggest count, which takes us down to 21,400 to 20,700, which is in the vicinity of the lows that were made in late 2018. And so a lot would have to happen for this count, which right now I consider to be quite speculative, but it's there and one to keep an eye on. But we do want to see whether or not the market can hold here and then stage a good rally upward somewhere in the near future. Okay, so this is a 15-minute chart, has not been published. This is the decline that we have seen with a climactic surge at the end. Notice how it accelerates downward, which puts us on alert that we may be in the realm of some kind of a minor climax, again, intraday data. This point right here is where this upper trend channel comes in. This is where the market stopped and then waited for the Mueller press conference. And at the time, 11 a.m. Eastern, when he started to speak, the market started to go into a free fall and went down to this lower channel line, which was formed by these 2 points right here, remarkably, which was back on May 17th. And notice how this set up an oversold condition. Well, we love this because, you know, Wyckoffians, we just study the events and the news, and we try to line those up with the technicals in our Wyckoff knowledge. And what we saw here was we saw the completion of an oversold condition on news. So the news people interpreted as being bearish for the market and initially sold off from there, and then produces a climactic run with a big volume spike, and then a push down where the volume diminishes all the way into this trend line, and then a rally. And the rally has an attempt to go up, comes back for a good test, and then rallies back into the upper channel. And so now what we want to see is whether or not this channel, the Dow Industrials can continue to rally in this channel, show some demand, or it tests in this area without appreciably breaking down. Now remember, it can go to 24,800 and still be in our point and figure target range. And so there could be more testing of the lows that were made down here just under 25,000. So a really interesting setup that we have at this time, and could set up for a couple of interesting scenarios that could be very bullish to marginally bullish, and then the one negative one, which is that very far down point and figure objective. Turning to the sector analysis, we finished last week on the XLK technology sector. Really interesting sector. It's been a glorious leadership sector throughout 2015 all the way up into the end of 2018. So here we can see a weekly chart with relative strength, and the relative strength tells the whole story, because look, all the way back here to 2014 we can see leadership all the way through, a relative strength above a rising moving average, and then here at the end of 2018 it dips below in the most important way that it has in the entire period of this chart, and then consolidates itself, sort of hangs out, and then turns back into a rising trend. And so we're looking at this and going, technology's reasserted its leadership role. Look at this wonderful rally. Railroad tracks, it just goes up and up and up, goes to a new high. Many groups and sectors have not gone to a new high in here. So technology looks terrific. But now we're having a more important reaction. So when we put trendline analysis on this, which we'll do here, we can see that these 2 points right here, here and here, set up this entire trend channel. So we have a demand line paralleling overbought line. We can see that it hugged in 2018 this upward trend channel and was making new highs even as the market was range bound and not acting so well. Technology continued to lead. But notice what happened in the fourth quarter. Important weakness that broke off the overbought line and was persistently weak out of the channel. And this is what turned down the relative strength. Now, this really impressive rally has pushed back up into the channel above the resistance line and has turned up the relative strength. But notice what's happened. Technology has turned below the resistance, has turned below the upward trend channel, and is now approaching the long-term moving average. But the good news is this: relative strength continues to be in an upward stride. As we would expect, a pullback, we would defer to relative strength that it's going to reassert its upward momentum. Now, we'll want to watch very closely to see that technology continues to show those leadership qualities. But this has really been an incredible star in this bull market. Okay, so the point and figure, this is a one box reversal, traditional scaling point and figure of XLK. And we have 2 counts that we're working with. 21 columns across here, larger count, takes us up to 78 to 87. We are now in the range of fulfilling this count. And so we will want to, and notice this, that we have had a reaction off of going into that count objective range. So this is really interesting. And also we've turned below this prior resistance area at $75. So we want to see relative strength and price reassert itself in an upward direction. And then also we have a smaller trading count here, which has been fulfilled. And so at around $75. And so we're going to want to keep a really close eye on technology from here and make sure that we're continuing to show leadership. Utilities, a couple of brief comments on utilities, and that is, notice that the thing about utilities, because of their defensive nature, income orientation, they tend to have periods of outperformance on relative strength that are shorter, as you can see here and here, and also here. But in this case, there's a really nice upward stride to the utilities throughout. There just are other groups that tend to have more of a leadership quality to them, but utilities are important tactical tools when the markets are defensive. So notice this about the end of 2018. This was a period when the market was acting quite poorly from the end of September onward into the end of the year. And notice the relative outperformance in the utilities during that period of time. Something interesting has happened here recently is, notice the lower high. All of a sudden there's a change in character of the utilities to the market. Now there is a rally off a rising upward moving average here, and continues to have higher prices in utilities, but we have a little bit of a warning here that we'll want to keep an eye on. And so the only other thing that we really want to do here is let's put the trend lines on. Trend lines are these 2 points right here, overbought line here. You can see that there's a tendency to ride on the top of the channel, and then here we're riding back on the top of the channel recently, but a very sharp bar that's taken us right back to the overbought line, with the possibility of coming back into the channel, especially with the relative strength starting to show divergent character. Okay, consumer discretionary, XLY, so interesting. And first thing is, let's notice the relative strength. And so the relative strength has been in a leadership position really since the fourth quarter of 2017. Notice that there's this really great upward trend, but it has not been a market outperformer really until the end of 2017, and then all of a sudden it became a discretionary became an important leadership theme. So note that the decline in the first quarter of 2018 did not produce any kind of a dip in relative strength. Notice this very steep decline in the fourth quarter of 2018 did not produce an important decline in the relative strength. And this was a really good sign. This also was a clue to us that these were the themes we wanted to focus on once the market was ready to start to rally again. And sure enough, look at the relative strength here, continuing to act quite well in the rally of the first quarter of 2019. So leadership in the decline produced leadership in the next rally, something that's very important to us as Wyckoffians, just as investors, really. And so now let's put the moving averages, or not the moving averages, but the trend channel back on. Interesting picture, because notice this, we have a break of the channel in the fourth quarter and a rally, and this rally took us marginally back into the channel. But since then, with pretty good volatility and an increase in volume, we've had discretionary turn back down out of the channel and is very close to its long-term moving average. The thing that we would have as an arbiter is we would expect momentum to reassert itself because the relative strength is strong. It's pulling back to its rising moving average. And so let's look to see if discretionary stocks can start to lead again and get back into that channel. But here I would say this is a slight negative, shows technical weakness that could be forming. A little too early to tell, but we would expect momentum, good momentum and leadership here to resume in consumer discretionary. Okay, point and figure count on consumer discretionary, pretty straightforward. On this backup here, we are counting across 14 columns, 1.5 point scale, which we have elected this, it's user defined, and it gives us a count of 112.50, 118.50. We rallied up to 120, and then look what happens is that immediately we have a turn off of the highs up above this resistance area. So this is an upthrust of sorts, and it's turned back down, fulfilled this count. Now there are larger counts available to us, so we may just need to consolidate and build a reaccumulation for another subsequent move. But for now, it appears that we've used up the fuel in the tank for this short-term rally phase. Okay, so this is communications, which is a relatively new sector for us to study, and you can see the volume only goes back so far on this chart. But what's interesting is the trend line study. So you can see here 2 points here and here where we draw the trend line, the stride of the advance. And I do want to make a comment here regarding a very good question about using logarithmic scaling versus arithmetic scaling. And so log scaling is great for weekly and monthly charts, where arithmetic scaling is more for shorter term daily charts. But think of it this way, is that log scaling gives you a rate of advance that is a percentage rate. So when you draw a trend line, you're looking at the percentage growth rate of that stock based on that trend line, or even a moving average. But you're looking at the log scale growth or the percentage growth of prices. When you do an arithmetic trend line, you're looking at the price growth. So the price is a constant. And so shorter term charts where the percentages don't change much makes sense, like daily and intraday charts. But on weekly charts where you have lots of movement over long periods of time on the chart, log scaling shows you the percentage rate of advance. And so it is a great way to study trend line growth, but also use both. Use arithmetic and log, and you'll get different looks, and they both could be valuable to you. So here we have 2 throwovers on communications that came in 2018 after a very long uptrend. So these have climactic qualities, and then a very sharp break, which is a break of automatic reaction type qualities. Maybe this is the automatic reaction here. Comes out of the channel, rallies back up, nice rally, relative strength wanes for a while, and then it starts to reassert itself. Momentum comes back into play, but we are still range bound in the communications area. So this is something for us to be aware of, because it appears that we're slowing the momentum of growth in communications, and we're starting to turn back down again. So let's keep an eye on this, because we are below the channel at this time. A very important sector that often doesn't get considered as a sector are the transports. And I think the transports are a most interesting story technically right now. And so we can look here and see that the relative strength has really been in a state of lower highs since 2016. And so even though we have a rally phase occurring in transports, the rally is not keeping up with the S&P as a arbiter for the performance of the market. And now we have something that looks like distributional qualities or distributional nature in the way that this trading range or range bound condition is unfolding. And so let's put our Wyckoffian markups on this and have a look at it again. Lower highs on relative strength. Relative strength is starting to accelerate lower. It's below its long-term moving average. We have trend channels formed here back in 2016, and these the demand line, look at how it breaks down out of that and rallies up, similar to the recent charts we looked at with communications and with discretionary, is attempt to rally back up through the demand line and a failure. This is what we're worried about with these other really strong leadership sectors we've been looking at today. But here, potentially completed distribution, moving back down towards important support, easily and effortlessly. Look at these big wide-ranging bars. The one thing that is a positive is we don't have a big increase in volume as it's going down, but that is in and of itself isn't a reason to be bullish, because there is supply and volume can come in later. The other thing to consider here, and this is just me thinking about why transports are acting the way they are and have been weaker for so long, is the transports may be sniffing out, or the investors in transports, and they have been aware that we were going to have tariff and trade issues a while back, and started to become defensive on the transportation index and these stocks, because these imports and exports have to be moved to market. And so this and trade wars do reduce the flow of merchandise. So this could be what's going on right now with the transport index. Recently wrote a blog on it. Go back and have a look at that. And this is a very important group to keep an eye on. And we'd love to see this group change its nature and turn back up into a more bullish structure. Okay, so our industry group profile today is going to be the restaurant sector, or it's actually an industry group in consumer discretionary. So we're drilling from consumer discretionary into restaurants. And so let's look at the stride of the advance here, and we can see that there is a tremendous leadership quality to the restaurant sector that has been in place since 2014. And so restaurants, people need to eat, and they have disposable income, and they're going out and they're buying meals in restaurants, which is a fun thing to do. And also, you know, the economy is fueled by the food that we eat. And so this past week has been a most important week for the restaurant industry, an annual event. And I would like to take a minute to acknowledge a very important segment of the restaurant business. Last Tuesday was National Hamburger Day. And so I think that hamburgers are so important to the economy that they should have their own industry group. But nobody asks me what I think and which industry group should be which. So there should be the restaurant group, and then there should be the hamburger group. So here is a recent survey of 6 hamburger chains, and this is by no means a complete list, but you can see here the some of the preferred hamburger chains that are out there. Some of them are public companies, some are not. So Five Guys is a franchise. It's not a public company. In-N-Out, which is one of my favorites, came in number 2, but is only really on the West Coast. But they're all great. Wendy's is great. McDonald's is great. Shake Shack is really interesting. We're going to look at a chart of that. And then, of course, Burger King is a standard. So they're all really important. But this is the key here. This is why I think that hamburgers are more important to the economy than money supply data, GDP data, anything that you could look at, because the nation runs on hamburgers. And I can prove this to you. And that is, guess how many hamburgers are consumed in the United States every year? 50 billion. So on average, people consume 3 hamburgers a week, and there's the equivalent of 154 hamburgers consumed per American per year. And so how can hamburgers not be just the most important thing ever? Besides, they're really, really good. And certainly I may exceed the average, I have to admit. And so, and I'm not biased at all, but hamburgers are great. So anyway, let's look at hamburger as an investment theme and see how it's done, and see if we can draw some conclusions about hamburger as hamburger chains and hamburgers as an investment. So clearly we can see restaurants are leadership. They are now rising at an increasing rate. They're above their the stride of their channel at this time, which could be an overbought condition. Relative strength is stellar. Notice how this relative strength has just really been great since the fourth quarter of 2018. And so this truly is one of the leadership industry groups. And so let's see if we can figure out which stocks are leading the way here. And I want to keep Wimpy in mind, because Wimpy was in Popeye, and Wimpy, who really understood hamburgers, he would say in the cartoons, and these go back to the Depression, is that he would say, "I'll gladly pay you Tuesday for a hamburger today." And so, you know, Wimpy knew that he had to eat, and he loved his hamburgers. The only problem with Wimpy is that he was always effectively on margin. And so we don't want to be on margin. The only time we want to be on margin, I don't know, in the hamburger business is if we own the stocks. And I think that Wimpy would have been better off if he'd owned the stocks rather than to have bought the burgers. But anyway, you know, that's water under the bridge, so to speak. So anyway, I do want to talk about caffeine for a minute, because caffeine is remarkably important in this country, in the world. And you can see here the Starbucks to its peer group is leading. Beautiful here. It's in an uptrend since the fourth quarter of 2018. Starbucks has been in an uptrend. I think this suggests that Starbucks could be early in an important move, and that even though it's going to pause along the way, that this leadership has only been in place now since the fourth quarter of 2018, and that's a relatively young uptrend. And look at this huge cause that's been built in Starbucks. And so even though they don't sell hamburgers, they sell coffee. Got to start the day with coffee and then work our way into the burgers. So at least that's the way I do it, and I'm sure that you all do it in your own unique way. So let's look at Shake Shack. Shake Shack is an interesting stock that we have been profiling off and on. I talked about it at Market Watchers Live a year ago, back I think in April, right around here, and then had this huge jump on good earnings. It's had an important backup, and now is sideways. It has not taken out these peaks up here around $70. And so it may have to do more work and become more dull and quiet, but this is a big cause built for an important move in Shake Shack, and we want to keep an eye on this as a campaign candidate. Okay, the last stock we can really look at, because we're running out of time, is the Beyond Meat IPO, which has just come out at the beginning of May. Came at $25. It's already just under 100, and so a remarkable advance. And this is in the food product sector, but it's a meatless alternative for hamburgers, and lots of good reviews. People really like them. People that can't eat meat or don't want to eat meat, this is a great alternative according to reports. I have not tried them, but anyway, this is a stock to keep an eye on as an alternative in this space. I want you also to look at Habit, HABT, which I don't think is building a base yet. So just a note. McDonald's, which is sells by far the most burgers imaginable, and they do a great job and have been good leadership. And then also look at Wendy's, WEN, and look at its leadership qualities also. And on that note, I want to thank you all for being here, and let's do this again sometime soon. Thanks for watching. Take care. Have a good week.